Hi everyone, Maths Connor here, and today we're going to look at a different category of stock. This week we're looking at a high price stock to sell, not to buy. So, if there's a stock that maybe you really shouldn't be holding anytime soon, or there's a stock out there you possibly want to short or buy some put options on, here is one for you. And this is as of Thursday, October 3rd, 2013. And, here's the teaser, top page. It's in the broadcasting industry, and the 12-month downside potential we figure to be about, possibly as high as 57% or down as much as 57%. All right, so what's the name? The name is Sinclair, is the Sinclair Broadcast Group, ticker symbol SBGI. Sinclair is a television broadcasting company that owns and provides programming for, last official count was about 86 stations in the United States, but they were going on an acquisition mini binge recently, and they've acquired significantly more. But at any rate, the company operates in 46 medium-sized markets in the United States. They're the largest independent TV broadcaster in the States. So, they do have a foothold. The website is www.sbgi.net. And, they're headquartered in Hunt Valley, Maryland, founded in 1952. They've got 4,000 employees, and the annual revenues was $1.2 billion the last 12 months, and the net income was $114 million for the last 12 months. The cash for operations is a little bit more, at $210 million, and their market capitalization, the value of all their stock outstanding, is at $3.4 billion. So here's a map showing their wide footprint. Once again, they have a very strong foothold. They're the largest independent TV broadcaster, but once again, they're also in medium-term markets and in large markets anyway. Here you see that they have Fox, ABC affiliates, CW, CBS, and NBC affiliates as well throughout the country. Now, one interesting thing to see here is we talked about the revenues, and the light of acquisitions, the revenues are going up, but their margins have been coming down. I mean, the margins for 2012 were 45%. And for 2013, they've come down to 37%. That's a trend that's just not good for profitability and future outlook. The cash from operations was $211 million. Here's some of their valuation ratios. The trailing PE ratio is 23.8. The forward PE ratio is 10.8. The PE growth ratio, the PEG ratio, is 9.9. Definitely a bit rich there. And the price to sales, 2.8. And price to book, 8.8. That's definitely a rich in my book, that's for sure. And the enterprise value to EBITDA is 11.5. Recent closing price of the stock is at $33.90. The 52-week high, it's been as high as $34.90. I'm sorry, the recent closing was $33.89. The 52-week low has been as low as $10.01. So yes, it's clearly had quite a bit of a run-up from its low. And let's see, the 20-day moving average, $28, 50-day, $27.42, 200, $22.33. I mean, those are bullish trend relationships, that's for sure. Average volume, stock has a healthy trading volume of 1.6 million shares a day. The beta is 2.34. Definitely, it's been moving stronger versus the market. And the average dividend yield over the last 5 years has been 1.8%. And the average dividend payout ratio has been 43%. So on average, they've paid out 43% of their earnings as dividends. But that number, that's an average number, and it's really kind of been all over the place. Some 1 year they paid more than 100% of their earnings, and another year or two, another year they didn't pay any. Actually, 2 of the last 5 years they didn't pay any dividends. So it's just an average number, but it's definitely not a steady one, that's for sure. Here is the price chart for Sinclair Broadcasting Group. Once again, it has a bullish outlook based on price trend. You would think like, you take a look at this thing, you think like, is this a stock I should hop in? They've made all these acquisitions. They're growing. Looks like a potential winner to me. But at the end of the day, you find that valuation rules the day, and you really need to take a good look at what their forecasted earnings are, their historic valuations, the trends of their profitability. As you saw earlier, the operating trend isn't doing well. Their financial statement quality is fair, and I think I was being generous in that category. You could actually say it's poor. Their shareholder equity right now is negative. So their financial statement quality is fair to poor. The operating trend margin is deteriorating. True, the price trend is bullish, and still, as with the prior weeks, Tim, the model's overall market look is still bearish. We're still seeing more overvalued stocks than undervalued stocks. That's for sure. And with the outlook, the earnings outlook of Sinclair over the next 12 months, it's just not favorable. In our book, the stock is just overpriced based on historic trends. Yes, the recent closing price is $33.81, but we think that the stock can go down as low as $14.44. So 12-month potential we see is 57%. The company is working to grow, but it has a lot of leverage, negative shareholder equity, poor financial statements, operating margin trend is not good. So this is a stock we would avoid, or even consider taking a short position against, or buying some put options against them as well. So that's our assessment of Sinclair Broadcast Group, a high-priced stock to sell, or overvalued stock to sell. And just to wrap up, this is brought to you by Content Management Group, and if you haven't already, please sign up for our Saturday morning updates. You'll be among the first to hear about great investment opportunities you won't hear anywhere else. Our picks are a result of real-time analysis of our own proprietary algorithms. We're new on the block, and we're here to just show everyone how good we are. Don't miss out. You can just go to www.gmcstockpicks.com and go to our sign-up page, and you can start receiving our weekly updates. And also, if you have a presentation, you could just click here and go to our subscribe page. You can always unsubscribe with just one click. So, have a good week, and talk to you soon.